Only days after the UK officially exited recession in Q3, data today suggests the economy will shrink once again in Q4. I'm Jamie McGeever and this is today's Market Pulse. Before that though, a quick stock check on today's big corporate stories. Shares in HSBC, Europe's largest bank, down 1.5% after profits missed forecasts, and the bank sets aside a further $1.15 billion for its US money laundering case and UK loan insurance mis-selling claims. Total US fines could be significantly higher, says CEO Stuart Gulliver. And Ryanair among the day's big gainers. Shares jump almost 8% to their highest in 5 years. Europe's largest budget airliner reports a forecast-busting 10% rise in first-half profit and raises its full-year guidance to between 490 and 520 million euros. Well, the main data point today is from the UK. Services PMI falling more than expected to 50.6 in October. This shows the sector growing at its slowest rate in almost 2 years. Here to discuss further, I'm joined from the London Stock Exchange by IDA Global Head of G7 Strategy, Michael Gallagher. Michael, good to see you again. One bank this morning saying today's number, taken with last week's manufacturing PMI, suggests we're in for contraction in Q4. Do you think that's a fair assessment?
I think it is, because you sort of tend to see after a particularly good quarter like we had in Q3, something of a correction anyway. And I think the correction is actually going to see a negative print from our perspective in Q4. I think what it's telling us in terms of the underlying story is that the UK is bumping along the bottom, that it's facing severe headwinds, and the economy is not shifting into a new growth phase.
After the GDP numbers, many would say that the door for more QE was almost firmly closed. Do you think today's numbers pushes it ajar slightly?
I think for the market feels it is a relatively close call for Thursday. On balance, I'd say the market's now around a 40% probability of additional QE being announced. I think we would argue against more QE at this juncture. I think the bank have been very clear in their statements, or at least our interpretation, and I think there's more switching emphasis onto the funding for lending scheme, and that being the main way to try and boost the UK economy.
OK, finally, the euro at a 2-month low today against the dollar, back below 128. Where is the next 1 cent move, up or down?
We're looking for a move ultimately to 126.90 later this week, and then down to 125 multi-week. We think the key thing is going to be fiscal cliff uncertainty after the election, and that's going to boost the dollar.
OK, Michael, thank you very much. That was Michael Gallagher from IDA Global. Well, today's chart point focuses on the German Schatz. The yield back below zero for the first time today since early September. Investors seeking safety in the Eurozone's lowest risk bonds ahead of that make-or-break vote in Greece and an uncertain US presidential election. Finally, on this day in 1626, a letter from Peter Shagan to the Dutch West India Company makes the earliest known reference to the purchase of Manhattan Island from a local Native American tribe. The price? 60 guilders, which historians put at around $1,000 in today's money. Whether or not this was a good deal at the time for either side, the Dutch clearly weren't that impressed with their bounty. In 1667, they passed the island on to the English in exchange for Suriname. That's today's Market Pulse. For a look ahead to Tuesday's key events, do watch Europe Day Ahead. That's available from 4:30 London time. I'm Jamie McGeever. This is Reuters.